Good afternoon. Lovemore, thank you for joining us today. We have Mr. Lovemore Ndlovu joining us, who is our head of SARB engagement and expatriate compliance, and we are discussing contemporary myths and common misconceptions regarding the cessation of tax residency process or financial immigration process in its current form in South Africa.
Thank you, Richan, and thank you for having me.
For sure. Lovemore, jumping right into it, with many thousands of South Africans still immigrating from South Africa and living and working abroad, choosing to pursue alternative employment opportunities. We still see that the need for them to regularize their tax affairs with South African Revenue Service is very much still a need. However, there have been certain changes and developments in recent years with the South African Reserve Bank and SARS as to how these expats must formally regularize their tax affairs and exchange control affairs. Can you take us through some of those changes and how that will affect expats currently?
Right. So the previous process used to be mainly centered with SARB, which is
right,
who at the end of it all will confirm one as a non-resident.
I see.
Whereas now it's moved and being centered with SARS, where one has to cease and formally be confirmed as a non-tax resident, which then goes back to the banks for the sake of exchange control. And that involves conversion of the bank account from a resident status to a non-resident status. So it's almost like a reverse process now, where SARS has to go forth, confirm non-residents, and then exchange control follows suit.
I see. So it's sort of swapped around, if you can call it
so
that.
it's kind of like they just kind of like swapped the positions.
I see. I'm seeing a lot of expats that I consult with that will say to me, no, but Richan, I did financially immigrate. I am a non-resident. I did this process in 2018, 2019, or 2020. And they are often shocked to find that per SARS records, they are still regarded as being a tax resident, a so-called normal resident taxpayer. Why would you say, that is the case, and how can they best rectify that?
So what actually happened is when the process changed, eliminating SARB from being the main player and SARS taking over, it unfortunately didn't involve or take into account those that went through the previous formal immigration process. So they kind of like introduced this status, which is non-resident status with SARS. However, they didn't consider everyone else that did the process previously, meaning that everyone now has to go through the process that is currently the legal process of seizing tax residents for them to be confirmed again. So it's more like SARS taking stock of all the non-resident statuses that were there, including the current and the new ones.
I see. Yeah, it certainly looks like SARS is scrutinizing expats more closely than what they used to.
Most definitely. And you would really agree with the way they request for information and document in terms of evidence and proof.
Yeah.
They're really scrutinizing and making sure that you really meet their requirements before they even say, yes, you are a non-resident, and confirming from which date, which is the main aspect of the whole process.
I see. No, that's interesting, and it certainly highlights that expats need to have their ducks in a row in terms of having the required documentation to prove and support their tax non-residency on hand in case SARS does come knocking.
Most definitely, yes. I mean, you need to have all your ducks in the row, as you say, and you need to have at least more than enough evidence than to come short. Otherwise, you will just find yourself with the rejection, and it's normally scary for experts when they get the rejection because it comes across as if they cannot actually seize. Yes, you can. You only have to have enough evidence to prove that.
Now, and I fully appreciate, Lovemore, that it can vary from a case-by-case basis. But from a high-level view, what are some of the typical supporting documents that SARS will now request from an expat that wants to regularize their tax non-residency and formally confirm this with SARS?
Yeah, so the most important part of the process is confirming when did you become a non-resident, which is obviously you need to prove by showing proof when you actually left South Africa. This is by form of an exit stamp on your passport, as well as proving your stay in the other country. That is residence permits, citizenship, foreign passport. And also, in addition to that, you need to provide the tax residence certificate, which is a confirmation that you are a tax resident in the other country, hence ceasing in South Africa.
I see. All right. Then, Lovemore, moving on, what I also encounter and what we see a lot in the market is many expats are hesitant to formally approach SARS and proactively address their tax residency status because they have some misconceptions and concerns that if they do so, that they have to liquidate all their assets and commercial and business interests in South Africa, as an example, or they mistakenly believe that they will lose their South African citizenship and passport. Is that the case, or what are the restrictions imposed along the lines of your legal status in South Africa and your South African assets?
It must be known that this is a process that only affects your tax status. Right. It doesn't affect your resident status in terms of being a South African or a citizen. It doesn't also affect your investments. Yes, they are attached in a way around taxes as well, but not the structuring or being forced to actually move them. You still can keep your assets, you still can invest, and you retain your citizenship. You still can visit South Africa. There are restrictions, of course, but you still can visit South Africa. You are not allowed to come back or not allowed to visit or just to have everything.
Right.
You can keep your assets, you can still come back and invest, and still keep your non-resident status.
Right. And another misconception that I'd like to touch on that I've also encountered, some South Africans may find themselves in a bit of hot water with SARS in terms of maybe they have a bit of a tax debt that's accruing, that's owed to SARS on their e-filing, or they maybe have outstanding tax returns for a few years. And it seems that there's this belief for especially internationally mobile South Africans that are able to, book a plane ticket and travel, that they can simply leave the country, and then if they were to do the cessation of tax residency process, that it will have the effect of cleaning up all historic non-compliance with SARS. Is that the case, or are they in fact mistaken?
That's definitely mistaken. And like I said previously, SARS is more of evidence-based process. Everything that you do with SARS needs to be evidenced. Now, if you pack your bags and just leave and hope that things will just settle themselves, that's a misconception. There is processes that needs to be followed for you to confirm and say, officially, I've done this process and I'm a non-resident. However, should there be any liabilities, outstanding issues or matters with SARS, that will not solve those. Those issues will also have to be faced, resolved the right way, and then you can say you've got a clean bill with SARS. It's not going to happen automatically.
I see. So it's certainly not a silver bullet to magically fix all your tax issues.
Unfortunately not. Yeah. You still have to face all the other issues despite having gone through the formal process of ceasing tax residence.
No, fantastic. Another item that we see that sort of serves as an area of confusion for expats is around the banking and exchange control regularization formalities as part of this cessation of tax residency. Many expats seem to believe that they're not allowed to keep their South African bank accounts, or that, you know, they have to close everything down if they seize their tax residency. Is that the case? And if not, what are the formalities required from a banking perspective, Lovemore?
Right. Yeah, you are right. That's one of the common misconceptions. Yeah. It used to be almost the case under the previous process. In one fact, one had to have banking accounts with one banking institution for them to go through the immigration process, which is the old regime. Right. Now, a lot of people still had that in mind and thinking that, well, still under this process, you may not keep bank accounts, but it is no longer the case. You can keep your bank accounts with all the various banking institutions, and the only thing that needs to be done is when you change your status from resident to non-resident, the banking accounts should also be converted to match your tax status. Now, here is the thing. You can't be seen as a non-resident with SARS while you are seen from a banking perspective as a resident. That's now a misalignment of statuses. So the statuses must align from a tax perspective and an exchange control perspective. That's the reason why the banking accounts should be converted to non-resident so that they align with your tax status.
Right. So that makes a lot of sense. So, you know, if you're a resident, you should be reflected as such with SARS and your local bank, but the inverse also holds true if you become a tax non-resident, which is logical, and that makes a lot of sense.
Yeah, correct.
Now, in terms of those expats that maybe still have, you know, some debts left in South Africa, they maybe still have an overdraft or a mortgage, and they now have left the country, what effect will this banking regularization step have on their credit facilities in South Africa, if any?
Right. So the non-resident status does not allow one to have credit facilities. However, those that are already existing will still continue until they run out, meaning that they still continue paying off until they are paid out.
I see.
Now, you cannot then be afforded a new credit facilities, for example, a credit card or an overdraft. You can still obtain a home loan. However, it's issued at a 1-to-1 ratio. What that means is you may be requested to bring in 50% of the purchase price as a deposit, and then you are only offered a home loan for the other 50%.
I see.
Or what the banks can do is they can look at the value of your remaining assets in South Africa and offer you a home loan, which is the same amount as the value of your assets in South Africa. So in a nutshell, credit facilities are not really allowed for non-residents.
Interesting.
It all has to go through the Reserve Bank or the exchange control rulings and approved before the banks can actually offer that credit facility.
Right. No, it makes a lot of sense. Then moving on, what we also see in some cases is some expats struggle to always obtain some of the key supporting documents that will be required by SARS to correctly seize their tax residency and obtain their notice of non-resident tax status. A common one that we see is SARS's requirement that a taxpayer must obtain a so-called certificate of tax residence from their foreign host country's revenue authority. Now, in many cases where they are unable to obtain that, or they can only obtain it for a specific period, is that a challenge, and how is that challenge typically overcome?
Look, that's the most common challenge that we normally face in the industry. And it's all because not all countries actually issue this tax residence certificate. And getting into and knowing that some of the countries actually don't even have individual tax,
Right.
let alone issuing this tax residence certificate. However, it's a hurdle that we've always gone past legally by creating or drafting a cover letter that actually specifies the facts around where this particular taxpayer is resident and the reasons why they cannot offer or issue this or provide this tax residence certificate.
Right.
This is just to explain to SARS that this taxpayer is resident in this country. However, the country cannot issue this tax residence certificate because of the following reasons.
Right.
And we've seen success in those. Cases are different, but we've seen success in those. And as I said again, SARS is always evidence-based. You need to support your facts. As long as you can support your facts and provide any other documents that can actually be provided in replacement of this tax residence certificate and have the facts in a row, you are clean to go through.
Right.
It's not always easy. It's not always a guaranteed success. However, with the right person, you will always get it right.
Right. So it certainly seems, SARS is willing to be a bit more accommodating. I wouldn't quite say more lenient, but they're certainly demonstrating that they are willing to accommodate expatriate taxpayers that do go above and beyond to obtain expert advice and opinions as to an affirmation of their tax residency status abroad in their foreign host country.
Yeah, most definitely. I mean, as strict as SARS can be, they also, as you say, they accommodate. They look at the facts provided or presented to them and say, well, it's factual based on the evidence provided, and they in most cases agree and accept and then approve.
Yeah. Yeah, no, thanks for that, Lovemore. Then final question and comment that we often encounter in terms of those expats that go through this process to become a tax non-resident, what does their filing obligation look like in South Africa? A common misconception or belief rather is that once they've gone through this process, then they can simply stop filing tax returns. Is that the case? Or are there exceptions to that? What does that landscape look like?
I actually like the way you put it, that it's a belief, not a misconception.
Yeah.
It's really a belief that a lot of these experts, I would say majority of the experts believe that once you've gone through the cessation process or inverted commas, emigration, you don't need to file any returns. You have completely cut ties with SARS. However, that's not the case. You still need to file your tax returns as a non-resident.
Right.
That is, declaring only your South African sourced income, if you have any. We always encourage submitting nil returns where you're not earning anything. That is to maintain your compliance with SARS.
Right.
And at the same time, it also serves as confirmation to SARS that you still remain a non-resident. For that particular tax year, you basically confirming to SARS that I remain a non-resident. I haven't returned, hence I'm earning nothing in South Africa.
Right.
So it's not the case that you completely stop submitting your returns. There are ways to go through that and stop submitting returns. That is deregistration.
Right.
If you deregister your tax number, then yes, you have completely cut ties with SARS. You no longer have to submit any returns going forward. However, you don't only just go and deregister as well.
I see.
There is a need to know that you need to have no assets remaining in South Africa, as well as not expecting any inheritance in future. Because should you receive an inheritance in future, you will need a tax number to file a return to declare that inheritance that has been received.
Right.
And now the tax number will then have to be either reactivated or register again to file a return.
All right. No, thank you for your time, Lovemore, and your expert insights. Greatly appreciate it.
Thank you, Richan, and thank you, everyone.